stop meeting me. If you're doing this for the women you losing, do this shit for yourself. I do this shit for myself. They not like us, and they know that. They not like us. We ain't gon' do. They not like us, and they know that. They not like us. We ain't gon' do it.
Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house.
My style is the bomb, daddy bomb. My style, da, 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 da. My style is the bomb, daddy bomb. My style is the bomb, daddy bomb. My style is the bomb, that style, la, 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 la. My style is the bomb, daddy bomb. My style Real man of genius.
Today we salute you, Mr. Daily Profiler Statistician.
Mr. Daily Profiler Statman.
While others guess where the market might go, you crunch the numbers, projecting highs and lows with surgical precision.
The high of day, low of day, you've got them dialed in.
London Open, you've measured it New York over under. You've tested it Asia range. You've logged every tick since 2018.
No lagging indicators for this guy.
Only you can say, based on the last 47 days, there's a 63% chance the high of the day forms before 11 a.m.
Probability never sounded so small.
So crack open a cold one, because trading isn't luck, it's statistics and a really big spreadsheet.
It's Mr. Daily Profiler Statman.
With a really big spreadsheet. Good morning, everybody. Happy Monday. What's up, Mickey? Oh, you're unmuted.
Yeah, I was literally said the same thing with a really big spreadsheet and I was muted. Like, I was like, oh my gosh.
Morning, bro. Morning, everybody. Andrew, good morning. Yeah, make sure you guys vote on the poll if you only like the stream this morning if you like statistics. Good morning, Jeff. Happy to hear that. Happy to hear that. Good morning, Void. What's up, everybody? Good morning. Good morning. Shag is not allowed to. Shag, this is the public stream. Go crazy. Morning, Winfred. Morning, Andrew. Wes, good morning. Noel, good morning. Good morning to see you here, Noel. Hope you're doing well. Morning, Stan. EP, good morning. Julie, good morning. What's up? What's up? Got everybody here. All right. Let's get into a little bit of what we are seeing here. What's up, Ike?
Oh, huge shout out to Ike. Listen, like we can't have him come in the room and not give him a huge shout out. Like he is the voice of how we trade in that negative R system.
Yeah, dude. Shout out to one of the people that just showcase realistic trading, not none of this bull crap. So appreciate you being here, Ike. Ike actually agreed. We gotta get with probably next month or maybe a little bit after because we got a lot of stuff coming out here. But Ike has agreed to come up on stream with us one day on a Monday and trade with us. So what's up, Lexi? Morning, Lexi. What's up, Henry? If Mike Tyson was a trader. All right. Morning, everybody. Okay, so first things first, get our highs, get our lows of days. Obviously, we are just skyrocketing. One funny thing going into this, I said this morning, is we only have 3 bearish hourly candles in this entire day so far, which is hilarious. But anyways, obviously, we got a really good low of day, in statistic low of day. But one thing I want to point out before we even get into anything else, I have rarely seen a weekly candle not have a wick. I don't think I've actually ever seen a weekly candle not have a wick on both sides. And one thing I want to put to everybody's attention is we have no wick, at least on MNQ. Do we have it on NQ? I don't want to sound crazy, but on MNQ, we do not have. Okay, NQ, we have a small wick going off of Sunday's open, the new weekly open here, but going into MNQ, we do not have a wick on this. And for anybody that doesn't know, or that what does that signify, or what's the significance of that? We don't typically have just wickless weekly candles or even a daily candle for that matter. So it's pretty crazy to see that we've just been skyrocketing this whole overnight session going into New York, and we don't have some sort of wick on the other side, which leads us into the context of the day. One setup that we always love to see and we get kind of excited for going into the morning, as we like to call it, the firecracker. And the firecracker is just simply put, all statistics, all levels, everything that we care about, they stack in a single direction. So from a retracement standpoint, the statistical levels that have high probabilities of being retraced at a minimum once per day, more than they don't, is first and foremost midnight open. Midnight open, which is this silly little yellow line right here, has around a 65 to 68% probability historically of getting retraced. You can see if I'm on the 5-minute time frame, it's actually kind of in the past 76 days, we've been hitting above that 65 to 68%. We actually have 72 in the past 76 days we've hit midnight open. So we can kind of see that in the current market, we've been favoring midnight retracements pretty well. In addition to that, we have opening prices 1 through 7 a.m. You can see these little probabilities beside each of the opening prices just tell us, hey, starting at 8 a.m., this 7 a.m., it's been retraced 96% of the time in the past 76 days, 88% of the time for the 6 a.m., 85 for the 5 a.m., 78 for the 3. So what does all this do? This tells us that we are in a mean reverting market more than we are in a trending market intraday. And so if I'm an intraday trader, I want to go where the probabilities lie. And so if we are overextended, all right, and I just want to draw, basically, if I want to use these levels to just go caveman brain and say, hey, I just want to make the most easiest, simplest way to look at this possible. This giant box has a high probability for majority of price to come back to it. Why? Because we have reasons. We have data points telling us that these levels get hit more than they don't. And then finally, to put icing on the cake for one of the indicators that everybody in the pack has are these probability levels. So each one of these levels indicate that whatever time frame you're on. So again, 76 days. In the past 76 days, this level has been hit 93% of the time, 94% of the time, 88, 93, blah, 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 blah. And they'll go away once they get retraced. So at least once per day, this level has been hit X amount of times. And so all of these levels just let us see when we're overextended or in the middle of whatever statistically we're due to do at least once per day in the market. And so when we have all these levels extending in just one direction going into the market open, we can kind of have a really cool picture, because we know that we have a high and low of day within the daily candle in 4 major times: 1800, 3 a.m., market open, or market close. Statistically, this is what numbers tell us. All right, so it's just a check off the list. If we check number 1, got a low of day at 1800, we don't have to worry about that one. It's impossible for the 3 a.m. to have a higher low of day. What's the next checkpoint? What's the next time that price could potentially make a high or a low of the daily candle, a wick of either side of the daily candle? In this case here, market open is the next major time. And so now, if market open is the next major time to check off the list of potentially making a high of day, we can see that this little run up that we did here at 810, this high right here, we don't statistically make a high of day at 810. And so this allows us to, number one, not just go ahead and get excited and get short just because we see some down bars. We actually want to align it with when we most likely are going to have that correction, if we have that correction. And so the first major thing I want to see is going into market open. If we leave this out of statistic high just floating here, I want to draw a box to represent the high and the low of the first 1 minute market open candle. If, let's say, we open up the market somewhere here, then I would be looking at market open to take this high to, and we see this all the time, especially on these firecracker days where we leave an out of statistic high and we'll see market open sometimes wick it and then just make an in statistic high, then start firecrackering down. And why do we call it a firecracker down? Because it moves pretty aggressive. And you'll see this. We'll break above or below market open and it'll just melt, just start melting. And like a firecracker, it just starts firecrackering all the statistics pretty quick. So that's what I see if we leave this at a statistic high here. If we have market open, maybe we start correcting now and maybe market opens just normally like this right here, then I'll be looking for extended cash flow shorts to the downside. When I say extended cash flow shorts, because you got to define that, right? So for me, how I trade and my definition of a very low hanging base fruit, shout out to Ike again. Ike talks about this too and how he trades. He just tries to get that low hanging fruit. Same thing here, but I just want probabilities beside of it. If my low hanging fruit of the market, some days it's just going to be 0.1%, or if you want to do that from a points perspective, that's about 25 points. all the way to 0.3%. This is my area of operation. All right. This is where I know that me as a trader and how I trade and the statistics that I trade, this is my sweet spot. And so how can I fit the actual live price action into my sweet spot of high probable price movement? And so if we break below market open with an in statistic high of day and we have all these levels below, these levels allow me to say, okay, well, check this out. If I want even on the higher spectrum of cash flow, if I want on the higher end of my target to be around this 0.3%, or again, points wise, about 70 points, I actually have realistic expectations. I see that there's so many probabilities here in this area that can I just realistically get an extended target? Yes, I can. And so what this allows us to do is a lot of traders, they fall into the trap of always trying to, catch the high and then run it for 500 points or 200, whatever, just a large target. And then they'll get a good portion of their trade fulfilled, and then they get reversed. And what these levels and probabilities, retracements, and all this stuff allows us to do is it allows us to see that with realistic expectation, we have a 93% chance price coming down here. 5 a.m., 85% chance to here. 3 a.m., 78% chance of coming here. Midnight open all the way to here. So these levels just are like checkpoints of price, of just realistic expectations of where price is. And so if I'm short, can I just get a good piece of this move? And then here's the other side of the coin. This is the secret sauce of how we trade. Are y'all ready for this? We get to make money being wrong. So here's the other complete side of the coin that so many people mess up on as traders, is they want to over perfect their system and they want to be right to the tick. They want to go short here and they want their TP to be here. And this is exactly where the market needs to move. But guess what? Does the market really do that? No. What it does more often than not is if you have like a point of interest, let's say your point of interest is here and you're targeting this full move, price comes down and just barely misses your TP and then comes all the way back up. And so what I like to do is if I have an overall intended direction of whatever my thing is, so in this case, if my overall intended direction is here to midnight open, well, then can I still be wrong and make money? Can I have expectations that price can come down to these levels, but then only make money getting a portion of that high probable direction with positive risk management? And so that way, if I just get the major catalyst of this potential move, but then we reverse, I'm already paid. The market has already paid me for being in this move with a high probability. And now I'm increasing my probabilities even more, because if midnight open has a 65 to 68% probability of getting retraced, and I just take a portion of that potential retracement, well, I have a 65, 68% accuracy all the way to this yellow line. So obviously I'm increasing my overall accuracy and my probability that my target's going to get hit while using positive risk management, aka using market open as my definition of invalidation if we keep going to the downside or keep going to the upside. So that's what I'm seeing this morning. To wrap it up before I hand it off to Mickey here, is we have an out of statistic high of day right now at 810. And so I want to see one of two things happen. If we go into this market open and we leave this out of statistic high of day floating right here, I will look at only cash flow longs of any kind off market open for a potential new high of day if we break above market open. Or if we break below market open and we don't have any motivation to come to this high, I will look for extended cash flow shorts to get into this potential firecracker. If we start correcting now in the next 45-ish minutes before market opens, because anything can happen, if we start coming and taking this high of day right now and we open up the market at new all-time highs and high of day, then nothing changes. I'll be looking for extended cash flow shorts to the downside to get a portion of this overall move. And then if we break to the upside, I'll just be looking for cash flow longs. And that is what I see today, Mickey.
I like how you talked about like the market environment, the condition, and like the more realistic risk profile that you trade. And that was one of the eye-opening things that this last boot camp identified. So in the boot camp, like what the boot camp is 3 months of trying to get you to do the same thing over and over and over and over again. So you don't have to jump, you don't have to chase, you don't have to, be a fanboy with one of these influencers out there. But like the first month, like I sit there and teach you the education phase, right? I teach you like how to line up, how to read a live market first and foremost, and then how to read statistics and how to align those two together. And we talk about the different daily classifications that the market can do. Basically, think market environment. Do we trend? Do we range? Do we reverse? And we talk about volatility environments as well, right? But the second month, which is the second phase of it, right? We talk about how to build proper risk profiles for the type of trade that you're taking, right? Like so, and like if you're trending, what that risk profile should look. So if I had to engage with 10 micros, like how do you enter the position in a trending market? How do you add to your winning position? If you're in a ranging market, should you be slamming all 10 micros there and taking that low hanging fruit on the reversal? Like, should you be slamming them all 10 at the bottom of the reversal zone, or should you be easing into? Because if you get it right, you're going to have the rest of the day. So we talk about all that. And one of the assignments is they have to take an hour, a specific hour in the day, because most of the audience that we attract is trade and prop firms, right? And we show them through whether it's a 15-minute reversal breakout, whether it's through a 05, movement, whether it's through all these different types of, trade ideas that you can take in an hour to 3 hours, right? What the highest profit factor and expected value is, right? And that was an eye-opening thing for a lot of them to see, is like the shorter time that you're in the trade, the more it's beneficial to be a negative R style risk profile. And to actually extend that risk profile back into the positive, you have to extend your TP and you have to extend the time frame. So the strategies that we tested that were trending based strategies, right, that would have you in the trade for more than 3 hours, right? Those usually had better profit factors and higher expected value because you were in the trade from a longer time duration and price duration. But the way most prop traders trade, most people aren't in trades longer than an hour. And like that's where it makes sense. And they're just trying to get 10 to 20 handles. And like a lot of people don't realize like that negative R actually during that time frame and that price movement, right, is higher probability over the next 1,000 trades for you to do negative R. Now there's a lot of science behind it and math behind it statistically that you have to find that sweet spot, kind of like you did with the midnight retracement, right? You can't just throw a negative R trade out there and be like, this is going to be profitable over time, because how many times you win versus loses, how many times that negative R gets hit versus that TP needs to be balanced just right, where the TP gets hit a lot more than the negative R. And so like, it's something that requires like, it's the highest probable way of becoming consistently profitable as a prop trader. But then there is a balance on, right? So think of it like this, like if I'm going to put a 0.20 percent stop, and I'm only going to target 0.05 TP, right? So we'll say, because I know a lot of the listeners don't speak in percentage terms, so we'll say I'm going to have a 50 handle stop and I'm only going to target 10 handles. Over time, does that measured move happen enough for those 10 handles to happen more to make up for the times that the 50 gets hit, right? And so like there's a balance there. But like I think that was the most, after looking at like the reviews and talking to the last boot camp, right, that was very, very much eye-opening for them to see. And I personally think that led to them actually a couple of these students becoming profitable, because they got away from that cliche theory that nobody has ever proven with statistics, right? That just the nonsense noise that gets fed to you constantly, right? On social media.
When people hear negative R, I think one of the huge confusions and misconceptions is they're just thinking in a linear black and white mathematical sense that, your loss is going to wipe away your wins. But the thing that you need to look at is, what is our target? If my target isn't my target isn't just, and trading a negative R system, this is very important. It's not just I'm arbitrarily profitable because I have a high strike rate. It's that the
Mhm.
targets that I'm choosing to trade
Exactly.
towards are objectively proven to have high accuracy. If I trade towards statistics with 70, 80, 90% probabilities of getting hit at least once in a day, and I'm getting a portion of that overall 70, 80, 90%, that is a in stone fact, verifiable, objective reason for price to go there. And so you're trading with a baseline accuracy. You're not trading in the negative R sense of just hoping that the math makes sense over time, that you have a high strike rate and so it's going to cover the time that you do experience a loss. We're trading with negative R to let the invalidation invalidate us to lose against the winning team. And then the target is naturally going to get hit more than it doesn't, not because of just a small distance that increases your strike rate. It's because that level that you're trading is objectively getting hit X amount of times, and that's going to bleed into your win rate.
Exactly. And so, like, a simple way of thinking of it, right, is right. Like, if I was going to trade 100 handles for TP and have, let's say it's a 1-to-1, 100 handle for a stop, right? But the market environment that I'm trying to capture this 100 handles doesn't have a high probability 100 handle measured move in it, right? I'm going to get hit that. Well, let's do it from a positive R, because that's what I know most people think, right? Let's say I'm targeting 100 handles and my stop's going to be 20, right? So the strike rate would naturally be less unless it's like the complete measured move, which intradays don't usually give you that quality of a measured move for 100 handles. So you're going to hit that 20 more times than you're going to hit that 100, right? And that's why it becomes difficult, because that target is overextended, right? So bringing the target in to a higher measured move hit, right, like, will allow you, even though if it's a negative R, right, will allow that TP to get hit more than the stop, and that will, over the next 100 to 1,000 trades, will allow, as long as you're position sizing correctly. But everybody knows the importance of position sizing, right? Like, I shouldn't have to beat that dead horse. Everybody in the world who trades should understand that the position size game, whether it's a positive R or negative R system, allows you to get past the 14-day risk of ruin, right? But yeah, I think we hit that enough. But all right, so if you took the midnight retracement, you should be pretty daggone close to hitting TP, right? The wolf entry on the NQ hit a couple, like 20 minutes ago. All right, so we're going to start with the daily analysis, right? We're above previous month 50% in NFP Friday from last month, right? And so statistically, we have 70% green candles versus 30% red, right? And so we just know that when that's just representing a bullish trend market on the higher time frame, and statistically it tells us expect 70% of candles, daily candles, to be green versus 30% to be red. Now, why that's important as an intraday trader is because it allows you to understand, hey, I should be getting the low of the day either in Globex session 1800 to 1900, 03 to 04, or 930 to 1030. All right, and then I should be expecting or anticipating the close to be above settlement, right? And for the high of the day to happen more towards the end of the day, right? And so we're starting to see that continue this month as well, right? So I'm going to start displaying this candle science dashboard that we just built, and this is based off of an individual named T Trades, right? Like, he is very much known for, like, hey, if these two candles do this, then there's a higher probability for this candle to do this, right? So looking at what Thursday daily candle did and what Friday's daily candle did, we're able to pull statistics on the daily chart or the weekly or the monthly or like whatever time frame, all the way down to the 45-minute, to see across any of these instruments, to see what the probability is. So in this case, I'm going to do it on the daily chart. Like, I put the different variables that Thursday did and what Friday did, and even so much to be able to see what the day has done when it comes to low, highs, and opens and closes, right? And we can see that when we did this at 5:30 in the Discord, right? We knew that there was a 67% probability that previous day high was going to get hit. But along that, we see that there's a 75% probability that we close below this high. We saw that there was a 58% probability that this low gets taken out, but there was a 92% probability that we closed above it, right? And then there's a 75% probability that we would close above Friday's settlement price, right? So we got that edge going for us, and we kind of see that. So now we're going to move over to the daily profile. And we talked about this morning as well, right? So we see that it was directional overnight, right? And whenever it's directional overnight, right, we know that markets don't just move straight up and straight down, right? They have retracements and they have probabilities, and they don't just move straight up and straight down. If we were in a constant trending market, then there'd be no need for the working class. Everybody would just invest in the stock market, and like GDP would go to shit because nobody would be working because they'd be making all the retirements off the stock market, right? So like we're going to capture that edge by saying, hey, this was a directional market. Like out of Asia, right, we put an instant low of day in, and then all the way into London we went long, and then London went short false and ended higher. And so now what we have to do before we go into that, whenever we have directional days, let's say Asia and London was long true, right? We can see that Asia's OU has only a 59% probability, and between 9:30 and 10:30 is a secondary mode, yes, but it's less than 2:30 to 3:30, right? We can see that the higher probability board target when we have a directional under a long true is targeting that London OU line, which has a 73% probability with this primary mode happening at 9:30 and 9:45. But that's not the sequence that we got this time. And obviously 1800 low day, end of day, high day, right? Now I'm going to change this to what we have, and I want you guys to pay attention to this probability in Asia and this probability over the time. So this is what happened last night during London. And so what we can see is that Asia OU got a 25% probability increase, all right, of actually getting it broken. And that the probability of that, of the time that it happens, shifts to 9:30 to 10:30, right? Like that becomes the dominant time. So what this tells us is even though there's different characteristics of these directional overnights, right? And the characteristic of when we get a long true and a short false none is that this Asia, London still becomes a higher probability. It's 87, it gained 10%, but notice that its mode shifted to 7:30 to 8:30 of being hit, right? So if we can start defining the firecracker by saying, like, if we go short, right, it will happen. We should be around this London OU and this midnight price for the day, more before market open. And then if we're going to get continuation, 9:30 to 10:30 will push us down to this Asia OU. But first and foremost, we have to break out of the 7:30 to 8:30 and get back inside of the P12 high range, right? So I thought that was fascinating. Just like if we did, and then the only other directional characteristic that we have, right, would be like short false, right? And we can see that Asia probability goes up to 91%, but there is little to none data of it getting hit in New York 1. It usually gets hit between 2:30 and 3:30, right? So it usually is hit by that point. And then the same effect goes with London. It maintains that above 75, 86% probability, but it's more likely to get hit under this directional movement between 7:30 and 8:30, right? So going back to where we're at right now, right? We were long true, short false, right? We know that both of these, right, have high probability targets. And so now what we're going to do is we're going to war game the low day, high day. We want to see every variable that New York 1 can do, and currently we haven't broken outside of New York 1's range, so we have to do all 4 possible scenarios, right? We can see that a long true, meaning that we step above this high right here and we never take out this low, right, supports that 1800 low of the day, and it supports that end of day high of day. and that from a percentile standpoint, we still have some meat on the bones. And 9:30 will tell us, 9:30 to 10 o'clock will tell us if it's going to take advantage of this and if we're going to do the long true. Right? Long false supports that 1800 low of the day, but it also tells us to expect a high of the day between 9:30 and 10:30, and for us to spike higher to head lower for the next from 9 to 11. Right? Short true, right, does have some data there, and this is where it becomes it's based off of how far we move. So we've moved the whole 10-day median range overnight. So this data still stands true, but is more likely to make a low of the day between 10:30 to 10:45 and make a high of the day between 7:15 and 8 o'clock, right? And then for a short false, it supports that low of the day as well in the day high of day, right? So right now, right? We have four possible scenarios, three of them, and possibly the fourth, because like if we did a directional move and only moved like 50 basis points overnight, then we could say that this low of the day, even for a short true, can be jeopardized. But because we moved the 10-day median range, right? Meaning over the last 10 days, we moved 271 50% of the time, right? We can expect that there is a possibility that we do not make a new low of the day, even if we get a short true and we just play the New York 1 session in this area, if that's the characteristic that it gives us. Right? So now what we'll do is we're going to come through and we will put our high day, low day information in here. But before we do that, well, yeah, I guess we could start. So we're going to start with the long true. We see low day 1800, 0.0 to 0.1 for a low of the day, 1.6 to 1.8 into day high day, right? So we can come over here, we'll put long true, 0. That's set up, and this is going to be 1.6 to 1.8, right? And then let's turn that on so we can kind of see what that looks like. We can see that this is a possibility of below the day for a long true, but to make the end of day high day, we need to move 200 more handles to the upside between now and RTH, and that's definitely a possibility. However, right, realistically, from a range perspective, we haven't been making those kind of movements. Right? Yes, I get it. We've been going up. I get it that VIX has been going up and on green days and all that, but we really haven't had a blow off volatility event that expands this daily range yet, right? So we know that yes, this can happen, but yes, we can get a long true, but this being a realistic expectation target, right? We don't have data to say, hey, you know what, like not really, but today might be the day. Like AMD went into partnership with OpenAI, and then let's say the government decides to pull their head out of their ass and start doing government things. Well, guess what? Like that's enough catalyst to get us up here and to be a volatility expansion to the upside, and then VIX will continue to rise on green candle days, right? And then we can start expecting that people are hedging, protections getting cheaper, and that we might be getting that blow off top that everybody on social media has been predicting since September, right? But like for us, it's all about realistic expectations, and like yeah, like it'd be cool to like capture this target right here, but can I capture this target over the next 100 days? The next 100 trades, the next 1,000 trades that I take with this situation, will this be a realistic target, right? No, it won't, because not every day AMD is going to go with OpenAI and then we're going to turn the government back on. So, like, this isn't really my cup of tea, right? I'm not the type of trader to trade anomalies like that. I'm the type of trader that likes statistical based trades that I can measure over the next 100 times that situation happens, I can pull a piece of the pie out of, right? Coming over to the long false, we can see the same scenario with low of the day. This one gives us a 9:30 to 9:45 high day between 0.7 and 0.83. So let's go put that in there. And so right now we can see that this is where the low of the day currently is playing it right next to the previous day high. We've already extended that. So that means that it has expanded the mode to median. So now we need to find another zone, right, for it to play in, right? So we have this chunk of data right here, right, where it's like 0.9 to 0.12. And then if we continue to go up during 9:30 to 10 before we make the downward move for this scenario, we can even push it all the way to 1.4. So we're going to go 0.9. And we're just going to have to use the anomaly high of the day zone for this situation, right? And we can see that that even extends us outside of our 10-day median range, but it's realistic enough to say, hey, you know what? 9:30 is going to pop higher. And then between 9:30 and 10, then we're going to make, and then we're going to start coming back down to retrace a little bit, right? So that's scenario number 2. All right, so we got our longs in play, and then the low of the day. This just means we're going to lead to a range 1 style day where we sit there and make out with the 9:30 price for 4 more hours. And then the low of the day supported and the high of the day would be supported if that's the scenario that it gives us outside of the 7:30 to 8:30 box. Now we're going to look at the short true. And we can see with the short true, this is the one that does not support the 1800 low of the day, right? From a price or time standpoint. But it also doesn't support, it supports a 7:15 to, like, we can even include this 8:30 high of the day. But even from a price standpoint, if we go to where the current price is, right, we're at 0.9. This doesn't really typically happen, right? So to sit here and expect the short true to be in play, right, that's another low probability assumption, right? Because we're in anomaly land. But like we said, we have the news catalyst to push us in anomaly land. So it could very much well play out this way, right? So we're going to put, we already passed the mode to medium. So we're going to go from 0.9 to 1.1. And the reason we put this one on our chart is to remind us if we start selling off, it's okay to, you know, like, you definitely can consider the short true because it definitely can have, it can definitely be a scenario. And then for the low of the day for the short true would be 0.4 to 0.93. And then the high of the day happening from, the low of the day happening from 10:30 to 10:45 or end of day, right? Now with this one, with the low of the day for short true, the 0.4, and we're gonna go 10:30 to 1600 because we had 3 modes there. Right, the problem with this one is it's requiring us the same thing that the true did, right? It's requiring us to put more distro in, and it's saying, hey, for this scenario to play out, we need to take out previous day high and previous day low, right? There needs to be some kind of catalyst that tells us that that's going to be the case. Friday was an inside daily candle, so we're not going to think, you know, like that's going to be the case, right? So this is another low probability scenario that we got to think through, right? And so now we're going to go through, do the fourth and final scenario, short false, and then we're going to think realistic terminology, right? Like, and start defining what we are expecting to see from 9:30 to 10. And if it does this, we expect this. If it does this, we expect this scenario. And so we can start building our trade plan. Right, so we see that 1800 low of the day, 0.0 to 0.1 still is supporting that low of the day. So we'll type it in. Right, and we see that it's already filled out from last week. And then from a higher day perspective, 0.89 and then end of day, right? So we already talked about being over the mode to median. So now we have to pick the next data source. Right? So from right here, 0.11 to 0.14 is a good high of the day expectation, right? For the anomaly that a short false will give us. 1.1 to 1.4 end of day, high day, low day, right? All right, so we did that, and we can see that that is like, yeah, we have enough range for it. Like this is realistic. So the falses over the trues, whether we go long false, playing a high day 9:30 to 10:30, if we go short and we bounce off and we net off a P12 high, London OU to P12 mid, right? Like that's realistic as well for this, right? So now what we're going to do, now that the falses make more sense than the trues today, from a distro and from a statistical standpoint, right? Like now what we have to do is start defining these levels, right? Like which one gets hit more, right? So we know right now, we already talked, if we go long false, which means we break out to the upside, put the high of the day in between 9:30 and 10:30, this Asia OU, as long as this by 10 o'clock is a realistic expectation target. After 10:15, it's not so much, right? Because like, let's go look at it, right? Long false, Asia OU. Okay, so it's a realistic expectation target until 10:30. But as you can see here, after 10:30, if we haven't hit it, more than likely we're not. All right. We can see for a long false, the same concept. We want that London OU to get hit by 10:15, 10:30, or we're going to stop shooting for it to be a target, right? Let's talk about P12 levels. We have not touched that P12 mid, and under all four possible scenarios, we can see a long true is the only one where it doesn't have high probability of getting hit, right? Long false usually gets hit, but it usually gets hit from 6, but it can get hit between 9:30 and 10:30. Short true, it has more probability. It has hell of high probability, but it has way more probability of getting hit between 9:30 and 10. And then short false, same scenario, right? 8:30 to 8:45. It usually comes down, bounces off of it to hit higher for the New York 1. That's not going to be the case today. So if we hit it, it's going to be after 9:30 to 10 o'clock, right? So let's check out settlement, right? We can see, right, that all of our probabilities, settlement, Globex Open, and midnight, have lower than normal probabilities, right? Midnight's a little bit average right now, 70%, 9:30 to 10:30. 9:30 to 10:30 of getting hit is the breadcrumb that the market's given us. Because even though this is mediocre, usually this has it has the mode being hit between 8 and 8:30, and then the secondary mode 9:30 to 10, right? We know that at least last year there was a high, and this kind of started shifting, but like settlement fill on a Monday, I remember that, Austin. It was like hell of high probability, right? We used to make, like, we would take every midnight retracement as long as we were above or below settlement on a Monday, and that's kind of shifted because like strategies have a reversion to the mean aspect to them, right? And that's the one thing that more experienced traders understand, they know, and we're starting to see that Monday settlement, right, Phil, is starting to revert away from being a past, being a thing that happens, right? So we can see that 64% of the, well, if we start with the 25% between market open and settlement, right, that's got an 80% probability. 50's got a 75, 69. So these are all weak numbers for this kind of trade, right? The one that will support it more is if we go short out of the 7:30 to 8:30 box, right? We can see that adds a little bit of oomph to these statistics, right? Short false and then long false has the highest probability. So that's the scenario where we come make a new high a day and then we reverse. So now let's talk about like what we're going to wait for, right? So we're going to call this the 9:30 price, right? ICD traders, you can use the first presentation. We use the 9:30 high to low 1 minute candle price, right? And we're going to say that this is the 9 o'clock open, right? Now we don't want to fight momentum, right? Like the worst kind of trading is to fight momentum, right? And right now, daily momentum's up, weekly momentum's up, hourly momentum's up, H4 momentum's up, everything's up, right? We know that we have high probability statistics to the downside, right? But our job isn't just to fade shit blindly. Like that's, you won't be a trader for long if you fade shit blindly. So we know that there's a possibility that 9:30 gives us a buy, right? From 9:30 to 9:40, 9:45, we get a buy off of 9:30 open, right? And so we're going to be looking, and this is going to represent the 9 o'clock hourly box. This is going to be the 50%, the halfback, the CE, whatever you call it, the EQ, whatever you call the midpoint. It's the midpoint of the 9 o'clock's range, right? So we're going to do this in 4 steps, right? Step 1, to take shorts, we need to get below 930 price, right? Get below 930 price. If we capture that high the day that the long false gives us, we're going to have all day to milk those shorts, right? We don't need to rush to failure. And if you are going to start selling blindly in the levels, let's say you have 10 micros to engage with, maybe start up here with 1 micro and then let these steps give you a place to add to those positions. So step 1, get below 930 price. Step 2, get below 930, 50% or midpoint or CE or a half bag or whatever you call the midpoint, right? Like we just make up random fucking words that sound smart and sound like great librarians nowadays. Right? But we're going to call it what it is, the midpoint. All right. Step 3, we want to see 10 o'clock take out, 9 o'clock slow. And then step 4, well, let's write that in. 9 o'clock slow. And then step 4 will be put a Q1 high in, 10 o'clock. All right, so besides the 8 o'clock hour due to the news and the 9 o'clock hour due to market open, every other hour likes to put the high and low of the hour in the first 15 minutes, right? So basically what we're going to see, like let's say 9:30 gives us a buy, right? We wait for us to get below 9:30. And like I said, doesn't mean you can't start trading this, like you can't start taking shorts, but you shouldn't start slamming your whole size right here, right? Because you're going against a lot of momentum and it just takes one little sneeze and you just got stopped out with 10 micros or 10 minis or whatever a heavier position size looks like for you, right? So get below 9:30, then get below 9:30, 50%, and then 10 o'clock, right? Takes out 9 o'clock low, put in a statistical Q1 high somewhere around the 50, the 9:30 low, or wherever you find fit, right? But the reason why we do these 4 steps is because, right, we want to make sure the obvious momentum has shifted, right? Because like if we do capture the high of the day between 9:30 and 10:30, we got the rest of the day to milk that information it gives us, right? And then it tells us very clearly, like when to maybe we have to buy the dip the rest of the day. Remember, your best bet is to identify when you're a seller and when you're a buyer. You're not supposed to be zigzag trading, buying every swing pivot, right? Like you don't want to do that. You're not going to be profitable that way, right? Like your job is to identify, are we going to reverse? Well, this is the criteria to fight the weekly, the daily, the hourly, the H4, the 6 hour, blah, 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 all the momentum going up. Well, these are the steps that will lock in that high of the day that I'm requiring. And so I can confirm that that's the high of the day. And then I know my job for the rest of the day is to sell rips, find strategies to sell rips, turn on systems to sell rips. We cannot do these. Then my job is to buy the dip and keep buying the dips and turn on strategies to buy the dips. Not so much trend-based strategies because we already know that we have potential and probability of being a ranged day, right? But as we range, like to buy the lows and ride it back to low-hanging fruit if that's the characteristics that we get for the day, right? Does this make sense, right? Are there any questions, right, in the chat? Did you just say, oh my God, this guy is too complicated and he's a fucktard?
We did have one, but I think we answered it like right as you were going through it, Cap. But Cap Crypto came in here, said, "What's the setup you guys are looking for?" So that's kind of like what Mickey was explaining just now, kind of like what he wants to see before he gets into a trade if we reverse.
Yeah, so if we keep going higher, basically my trade idea is going to look like this, right? Like, and I'll just use overnight. Right? So these blue boxes represent 05. Let's say we can't do those 4 steps and we're going the trend up, right? What I'll do is I'll wait for small little signatures. This is the first 5-minute box is the blue box, right? I always measure 10 handles and 10 basis points, right? Which is around 24 handles, right? Right? In the first quarter, right? Like if we do the swiping action like this, where we can't even make it 10 handles below, but we're starting to creep back into the 05, then I'm going to take longs, not sells, because you don't want to sell a market that wants to go higher. But I'll take longs around this 05 box for 10 handles to 10 basis points because we moved so much in the range today. I'm not expecting the the thing that's going to get me turning on shorts with the extended targets and the higher position sizes is getting that 4-step reversal. Any longs I take is going to be for 10 handles and only 10 handles, right? Because at any given moment, like we can get a headline news event that says the Democrats and the Republicans are pulling each other's pants down and giving each other wet willies in the air, and then that's going to cause the Nasdaq to freaking sit there and puke its all of its gains overnight sucks, right? So I don't do that, right? Like, so for any longs that I take, it'll be based off of these 05 boxes, and I won't take longs above 930. I won't take longs above this 05 box. I'll wait for characteristics in the first quarter of every hour to capture 10 handles, right? For shorts, if I get that 4-step reversal, I'll start adding 1 to 2 micros, trying to get it position heavy. If it's very obvious, like for example, right, let's say like, let's go back to the drawing board. Right, this is the 9 o'clock, right? This is going to represent the footprint of the 9 o'clock of the wick. So this is the close price of the wick. When 10 o'clock opens up and does something like this, and let me draw the 930 box. Right, and let's say like we can't make it 10 basis points above 930, and this is the footprint, or this is the close price of 9 o'clock, right? And we do something like this in 10 o'clock, right? And we reject the wick, and then we start selling. Like, I'll try to get a heavier position size, but I'll use the dump pouch, right? So for me, it looks like this. And I guess I could show you. Let me pull this up real quick. All right. And I'll just show you with one of the trades I took this morning. Right, so I take 15 contracts right here, right? 5 handles away, I protect the queen, right? So take 5 off, right, and it covers the queen, right? And then take the rest off at targets, right? But like, so the theory behind protecting the queen is like, let's say this is your entry, this is your stop right here, right? Let's just do it with the dump pouch. And this is a free indicator, like you guys all can have it, right? Like I'm not worried about it. Like, but basically, let's say I need this back on right here. All right, so let's say we got entry right here at 25.20, and then like people like you don't, once you get the concept, you don't really need to use the dump pouch anymore. You already understand it well enough to, when we said 25.220. And we see that price rejected this 5-minute wick right here. And so you got position right here, right? And so your stop is right here, right? At 22, nope, 25250, right? So you're now an official Furu because you got a tight stop, right? So like with a $4,500 account risking 5% risk per trade, right? I know that, let me do this on M&Q so you guys can see the pay the trader line, right? There we go. All right, so I know once it hits here, right, I'm allowed 18 contracts because of my risk per trade. I'm risking 225 per trade, right? And if my stop was a little bit higher, let's say we put it above here, then I'm going to come in with less position. So I'm only, my risk is still 225. I'm only allowed 5 contracts now. But right here, like, is the pay the trader line, right? So I would take off 3 of the 5 contracts. If it was the original one, right, it would be right here. I'm allowed more risk per trade. My risk is still 225, right? So at this blue line, right, I have to protect the queen, meaning like I'm covering the loss between, I'm covering my risk. So I'm taking 9 of the contracts off, leaving 9 on, and now that risk is completely covered plus some, right? Plus cash flow. So cash flow plus my risk being covered happens right here. And so now I'm in a risk-free trade because I've already pulled cash flow from it and I've already covered if the price does come stop me out, I don't need to move my stop anymore. I just let it hit the invalidation point of where I said my stop is invalid, right? And then if it wants to run to the new low day, cool, I got 9 contracts on, right? Now let's talk about the target, right? Trade management for this, right? Let's say midnight, let's say P12, let's say midnight was our target, right? Or let's say P12 high, right? P12 high is at 25,139, right? So now I have levels, right? At 25%, at 50%, around 25%, I should have paid the trader, covered, protected the queen. At 50%, I move my stop to break even. So whatever I pulled out of that pay the queen, like now is also additional cash flow. So 225 plus the spread difference, right? At 75, I'm not the kind of trader like Austin is. I'm not, right? Like I don't let the move go be, but then also he shoots for lower cash flow. When you're shooting for anything over 50 handles, this is how you should be managing the trade, right? I'm not going to let price come all the way to 63 handles, 75% of entry to target, and then for it to come back and stop me out. So at this point, I move my stop to 25%. And so now I'm getting paid 25 plus the money I made on pay the trader, or I'm getting the full target, right? But that's that. And now market's about to open. I need to shut my mouth because I've been talking way too much. My bad, Austin.
No, you're good, dude.
All right, so this is going to be a Monday stream, so it's going to force us to make decisions at the 9:30 open. Usually we get the breakout of this box, 7:30 to 8:30 box, before market opens, so we can
huge
prep.
range.
But now is going to make us really wait until 9:30 to make those decisions.
Yeah, the Q1 of New York is, I think we've seen this a few times when the Q1 of New York is pretty big. Let's see if we can find an example here. We had it happen. Dang, we haven't had Q1 of New York be this big in a while.
It's been a while, man. That's why I'm saying, like, everybody's confused, like, because we've been having these great movement days, these great trending days, but the range hasn't been expanding, right? This is actually the first day that we've had this much, besides last Wednesday. Last Wednesday, we had a pretty big pre-market range.
Yeah, one thing we look at, guys, that keeping in my radar today, and this is something that even goes to, if you look at these pre-market moves and these overnight moves, and we're looking pretty directional. One thing that we always try to pay attention to see if we're going to continue or if we are going to do some sort of mean reversion is exactly what Mickey was saying earlier, is the distribution, or sometimes you'll hear us call the budget. And basically, if the market's doing something, let's say in the past 75 days, you can see right here in the past 75 days, if a typical Monday creates around 0.61, we'll just use this for example, around 0.61%, then if we start operating outside of that budget, meaning if in the past 15 Mondays we've moved 0.6%, but then going into this session we start expanding to 0.7, it gives us this little red flag that if we start getting outside the budget of what typical Mondays have done, we're starting to see when, like from a quantifiable standpoint, we're actually overextended. Because you'll hear people say that a bunch. We look overextended or overextended to the downside, whatever. But what we're trying to do is we're trying to quantify that. We're trying to actually have a number that shows you instead of just eyeballing it, right? Because if there's a lot of budget for the day left and we're just moving directionally like this, it looks overextended, but statistically, we still got more.
You want to look out the window? You want to look out the window and bark at dogs? Here, bark at every dog that comes by.
I want to look out the window and bark at all the dogs.
Oh, damn. I didn't realize that. I thought I muted. My bad.
You
forgot to hit the mute button. Yeah, my dog wants to like look out the window and bark at dogs. That's her favorite thing. So like during the stream, you will hear dogs barking. I encourage aggressive, violent behavior. Yo, in the Army, that was so crazy. Like, they wanted me to give my soldiers Article 15s for getting in bar fights. I was like, I don't think you realize we're infantry. Like, that's good aggressiveness. I need them to get that violence out. I totally just took over the stream.
Jeez.
Dude, this is setting up for a great long boss.
Yeah, we're coming up there. I'd like to see us hit this little high and stat hive day to the downside.
I hope that we bounce right off of 10 basis points to the upside and we start heading down. We shall see, because right now we're set up for a 12-hour line up, but we've spent a lot of distro.
Let's see, how much do we typically? I'm just curious. So if I make this, we'll do this 3 a.m. to 16. So from 3 a.m. to 1600 in the past 75 days on a Monday. Let's let it load. Oh, we got 1 minute till market open. 0.86%. 0.86%. All right, ladies and gentlemen, let's have a good session. Make sure you have your contracts set. You're on the right charts.
All right, market's open.
Let's have a good day.
Weak market open. They're selling it. Come on, give me a good range. Oh, come on. Damn, that's a big market range already. We're not even 40 seconds in. 0.14 already.
Yeah.
So usually I'll try to front run to the 930, but today is not that day. Today I will be patient, because if the breakout happens to the downside, it'll be easy. All right, so you have your high, low, higher, high snap, right? This is a snap, so we should be seeing some kind of retracement to the 50, right? Depending on how we close, right? So let's see if we reject this 50 right here, or if we're going to snap higher and make it a long false. Make it a long false. That'd be dope, because like this 10 basis point is right perfect for a new higher day. I won't be taking this long, by the way. Will not be taking the longs. Not yet. All right, we're definitely rejecting the 75. So high, low, higher, high, snap, return to value. Needs to close outside the 930 low to confirm that.
Here we go. Crisis averted. Oh my God.
What happened, bud?
Couldn't get my settings right.
Gunship playing today?
I have it on. We're gonna see. We had some technical difficulties last Friday, so we're gonna see if it executes today.
All right, let's go. Come on. Break outside the 930. Yep.
All right, if we break to the downside here, depending on where we close, and I can define my risk. Let's see, we could get 0.19 to 0.2 to these levels to the downside here. Got 20
So
seconds on this candle.
I've already entered 3.
Okay.
But I'm probably gonna. Stops on the other side of 930. Price is 25.01. All right.
I'm taking this short as well.
Yep.
I'm going to target 0.21% at 120 even.
$25.093. How far away is that?
Which one? 120 even?
No, London OU. Damn, that's 90. So I can't hang on to a 100 handle move where I can't cover my risk, right? So since I only had 3 contracts on, like I'm gonna bring it up. Let's go 0.12. Let's go to P12 high. So what's your target?
120 even.
120 even. All right, I'll match you. 120 even. Let's go.
Yeah, that's 0.21%.
All right, new 5-minute candle, 1 minute. My risk is above this 930 low, saying that the next 5-minute candle will be red, and the next one will be red, and we'll get to 120 even. All right, so out of the last 4 930 to 10 o'clocks, we've moved 65 handles, and we've already met 65 handles. So that is some risk to this trade, but like we definitely have the distro for New York 1 that can add to that. And I missed another. I should have added. Over the last 16 930 to 10 o'clocks, the distro was dun, 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 dun. So this quarter, the 930 has been a little bit annoying when it comes to the distro that it puts in. So 92 handles. So yeah, like in the quarter, that's a realistic target.
Hey, I'll be right back. I've been holding this so bad. I gotta use the bathroom so bad.
All right, so new 5-minute candle took out the previous low. We're at 10 basis point low. We want to see a step below that and start closing below that. And we let this humongous volume imbalance right here. So that's not a good sign.
All right, I'm back. Yeah, the only thing I don't like about this trade, but profitable trading is uncomfortable sometimes, most of the time, almost all the time, is the fact that we have an out of statistic high of day at 813.
Yeah, that's annoying.
So
that's super
I'm not
annoying.
a big fan of that, but
only the short true can like account for that higher day.
Oh,
and
really?
Then it can't. Yeah, it can't account from it from that price level. That's the problem. I'll wait. Like if I get stopped out of this, I'll wait for the 945 reversal. But right now everything is on track, right? We're expecting a red 5-minute candle. Like 930 made the high, right? The major pivot. Like if we get stopped out, we get stopped out. Oh well. It's the price we play. Like this, I would take this trade every time, every single time under these conditions.
I bully most people, MND.
All right.
Okay, real quick, let's get back to the charts. So one thing that I'm always thinking in the back of my mind when I'm in a trade or trading, because a lot of people, what do? They freak out when they're in a trade because they want to win. I'm thinking
Real
about
quick,
the process.
let me update. I'm gonna add 2 more once we close below here.
Okay.
So if we get a 1 minute close below the 930, I'll add 2 more contracts, totaling 5.
Okay. One thing that I'm always thinking about is now that the trade is set, I'm thinking about losing. So I'm actually thinking about if this trade gets stopped out, if I don't get the move that I'm trying to put risk behind, what's the next trade? What's the next high quality trade that I can put? This does one of 2 things. Number one, this lets me see.
So I added 2 more, and I'll put
Okay.
the screenshot in the Discord.
This allows me to let this trade play out without over managing it, freaking out, going crazy. And it also allows me to not have any expectations of an outcome of a trade. So that way, if it works in my favor, it's preparing for the worst. And if the best case scenario, it does hit my target, well, then great. Now I don't have to do anything else. Or if it does hit my stop loss, then I can adjust fire and say, okay, what's my next plan of action? My next plan of action is if we can't make any motivation to retrace to these levels below, which is all these opening prices. We got all these bearish levels, opening prices 1 through 7 a.m., midnight open. We got London OU here. A lot of these levels have a lot of probabilities. Oh, we got gunship going off. Nice.
Let's go.
We're actually executing now. Heck yeah.
All right, new 5 minute candle.
All right. So long story short, if we break to the upside and I get stopped out of this, I'll be looking at joining the longs, because especially if we fail to get to any of these statistics here and we can't get out of this 0.1%, this is giving me directional signatures because we have a lot of statistics hovering in one direction. And if we don't get these, then I want to be on the opposite side of the move. Or do we continue here where I can then wait for another short? So I'm giving myself 2 to 3 attempts at this move if I get stopped, or it's going to be one and done if it just firecrackers.
Somebody needs to light the fuse. So one big thing that I'm noticing is that we cannot get below 10 basis points off the 930. And for me, like everybody knows, I'm going to exit my trade at 944 regardless of where I am, what my risk is. Right? That's just my business plan. So the way Austin trades 930 and the way I do are a little bit different, but my business plan has always been 944 you close because of that 945 reversal. And since we're definitely displaying above 10 basis points, I'm going to respect that.
Order canceled.
Dude, gunship's firing today.
Let's go. Come on, get below that 10 basis points. Close below it now. Come on, little fella. What a great day.
Wait, we can do split screen? Can we do this? Oh, that looks terrible.
Nice. Yeah, that does look shitty.
I want one where it's just like it makes you and me small, but it just splits our screen. That would be pretty cool.
All right, I'm closing in. I'll just close right now. I've hit 30 handles. Plus, I think, let's see, my price was right here. So yeah, I pulled about 50 handles out of the 930. And so between this and midnight, that was more than enough. Little PP micro trading. There you go. There's my initial position. That's where I added. That's where I'm TPing.
Good trade, dude.
Yes, sir. What a great way to start a Monday. And listen, like this, I'm I hope it hits your TP, but my rules are my rules, man. And this is a cool thing about like having partners and accountability buddies that like you respect and you trust.
Did you see
Is
what Nick
that
said?
yeah? What's that? Is that like Austin knows, and everybody in the boot camp and everybody in the pack knows that that's my trade plan, and like so they can hold me accountable.
Order
Like, yeah,
canceled.
price is gonna hit. You should be at TP, dude. You hit TP?
No.
How have you not hit yet?
It went to 122. It didn't get to 120.
Oh
just
yeah,
yet.
yeah. Cool. There you go. Also, I'll buy some and you'll push it down even more.
There we go. TP
There we
hit.
go. Good Monday. High five.
Let's go, baby. Let's freaking go. Boom. Boom.
We need the soundboard. We need to start making music of the soundboard so we can play it right now.
I can actually upload sounds. Pocket. We need some admin duties. We need soundboards in the music upload custom thingy.
Dude, we should play All I Do Is Win by DJ Khaled, but we need equally awesome sound.
Like this?
Yeah.
Let's go, baby. We make money with Excel spreadsheets.
The only thing that can stop me is me. If you're doing this for the women you losing, do this shit for yourself. I do this shit for myself.
Are they gonna? Well done, guys. Are they? Yeah. If you use music and stuff, want to get us like the soundboard, we'd want to get like a stream deck. Don't you have a stream deck?
Hey, Pocket, do you know what vibing means? He just left.
So look,
Who
I'm
just
looking.
left?
If we don't put the 945 reverse line right now, I'm looking for London OU P12 mid to bounce the head higher to turn this in short false. And then if we can't do that, then like obviously they're going to consider this being a short true. Did we take? Oh, we just swiped the previous 3 hour. Yeah, cool. So this is a great place to reverse.
Reverse.
So one thing I'll put on my screen, unless you're going to keep trading right now, I'm done trading for now until 10 o'clock.
I told you guys this morning that before you do that, I think somebody asked this earlier. They were like, what was your next setup or whatever? One thing that Mickey and I do that's different than what a lot of people do is we're not just sitting here reacting to price and saying, okay, we're just going to like, you're going to tune in and this is what we're going to do. Like, I'm just going to sit here and trade. We plan exactly the trade that we want to take. And if it doesn't align, it doesn't align, but we wait. And I think something that we don't see a lot of people do in the trading space is they think that live day trading or what we're doing is you're constantly like in a trade, out of a trade, looking for this, looking for that. When 90% of trading is genuinely just waiting, and that's a cliche everybody hears, but we're showing that. You guys just watched us plan, analyze, and prep for one little measly 50-point trade. We sat there and planned for it and war gamed all the different potential scenarios for like an hour and a half before even clicking a button to actually execute. And it's not because we're trying to be perfect. We're not trying to do anything crazy. We're trying to practice a single kick. We're trying to find a little fluctuation, little whatever the heck you want to call it. We're trying to get that in the most efficient way possible. And we're zoning in, tunnel visioned in on one specific move. And when that one move plays out, it's kind of funny because trading plays mentally in these little gymnastics we play in our brain. Once you're out of the trade and done, you're like, well, now what do I do? But that's what you're supposed to feel like. That's what profitable trading is supposed to feel like. It's not supposed to be like, all right, now we got to get back into the market. No, we're done. We just made our
Order canceled.
we made our pay in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 minutes. Sometimes it may be an hour and a half. Sometimes it may be 40 minutes. Sometimes it may be 2 minutes. Sometimes we've gotten an instant TP in a single 1 minute candle. But we prep, and everything you guys just watched, if you just tuned in or if you've just been listening the whole time, go back and watch all the prep work that we did, all the preparation that we strategically said, if this happens, then this happens, and if this happens, then that. We are prepping all the different potential scenarios that these goofy little Japanese candlestick charts can do, and only one of them have to align for us to finally click that button. And when we're done, we're done. That's it.
Absolutely. So, right, we know that London OU, midnight, P12 mid, previous day mid all have probabilities, but we're looking for the reversal. And so, like, what I've been working on lately is like this 12-hour MAE MFE, right? Is it going to be a check mark or a line, right? We can see during 9 to 12, like, there's a high probability that the MAE and MFE happens. But, like, to narrow this down even more, right, like I've been working on, right, this 6 to 9 o'clock range, right? Because the 6 to 9 o'clock range is very important to us all, right? I'm actually talking to a dude that has no affiliation with the PAX, doesn't even know of us, knows of me a little bit, but like we were comparing notes over the weekends. And it's so crazy because he's a data collector too. And his data is starting to confirm with my data. And like when I showed Austin the 69 range, he was like, let's start collecting data on it, right? So we can see that this is the 69 range right here, right? And then if we measure MAE or MFE, right, you can find if it's going to be continuation or reversals or what your probability is. And so this data right here is of the last 20 years, right? So this is your 6 to 9 range, right? And now we have to figure out, is it going to be a breakout trade or a reversal trade? So are we going to break out to the moon and not make it back to this side of the range, or are we going to reverse, right? And so we have MFE for the breakout. So if we break out to the upside, broke up to the downside. What each level of MFE and MAE is telling us. So like once we break out of one side, we can see from 0 to 0.15 or 0.15 to 0.3 is a high probability reverse zone for the MAE, right? So it's what we call it is a look above and fell, look below and fell, right? But then using the MAE to confirm it, right? So in this case, like we come up, we break up, we make it 0.15 to 0.30 outside of the 69 range, and then we start to pivot to start collecting the MAE, right? And so if the MAE, the reversal, right, happens to stay above 0.25, right, the breakout's still a high probability. So let's go to our charts and look at what I'm talking about, right? So we broke out 0.2, and then we started doing the reversal, right? So if this went above 0.25, right, like, so if it gets above 930, we can expect reversal and hit the other side of this range and then start incorporating the reverse MFE data for this. But because it did not do that, we can expect continuation down to these levels. So, right, let's look at this one more time. Now, how many people did I just confuse? So every single time range that you use has breakout MFE and MAE data and has reversal MFE, MAE data, right? And so in this example, we're saying once we break out of that 6 to 9 range, right, and we get above 0.3 to 0.45, we're more likely not going to hit the other side of the 6 to 9. But in this case, we stayed within 0.0 to 0.15 and then started putting the MAE. So we have to pay attention. How far does the breakout MAE takes us? If we went over 0.25, we can expect that that was the reversal. But because we bounced, we started rejecting that, we can still expect, right, the breakout to continue heading lower. So we only went up 0.21. So it's telling you to expect more probabilities to the downside before calling this a reversal and then capturing the reversal MFE of the 6 to 9 range. And the cool thing about this is, like, when you talk to other people who don't have any idea what you do, but they collect data, they might call it something different, like manipulation distribution, but they can show you the same exact data that you pulled. It's really freaking cool. Has that ever happened to you, Austin?
With what?
With, like, you pull data and you talk to somebody who has no idea how you're collecting data, and they confirm the data that you pulled with their data?
Yeah, that's actually I think I may have touched on it, may not, a couple streams back with JD, because that was like one of the things that when I was talking with him forever ago, and he was like, yeah, I use that 730 open. Well, what you'll find is with actual profitable people that we run into, whether they use statistics or not, when they see these repeatable movements, and this is also like why I love using statistics so much, is we're not trying to tell you or even sell you or say you need to use statistics with how you trade. But if you can quantify even a move that you're already used to trading and trading profitably around, maybe statistics will show you, okay, well, yeah, you have significance with XYZ, like this is good, but this is how you could maybe do it even better with even more probabilities in your favor. Because that's something I've seen with a lot of people that trade discretionary, is they'll tell me, you know, I'll trade this, the reaction off this high or the reaction off this low. And while that's still good, right, the price is respecting that level. What we sometimes find in statistics is that, but if you waited maybe 30 more minutes, or if you waited another hour, or if you waited for this level or something, right, the probability of this occurring in the favor that you're already trying to do is actually higher. And so that's the cool thing with statistics. It's like if you already got a good profitable machine, it can only make it even better if you just kind of see where you can fine tune it.
Yeah, I think that's kind of like what we did with you were doing the midnight, and then I came
Exactly.
in.
Yeah. We did the same thing with Midnight Open.
It
That
makes
was
the
biggest weakness.
it makes the decision making. Statistics make your decision making more powerful. You can still just trade discretionary, but like you have the decision making capability to say, hey, like this is what typically happens there. Like as you saw, like I saw that we broke, and then we broke the 6 to 9 range. We sucked back in, but could we bypass 0.25%? We couldn't, so we expect the sells to continue, right? Like, and then we read it off of MAE, MFE of the breakout, not the reversal data, right? Like, so it makes the decision making aspect of trading so much easier.
Yep. And I mean,
And
guys,
remember,
look,
probabilities aren't about predicting or forecasting. Like Powell, everybody will tell you, forecasters, like, oh, they get humbled a lot, right? Because they're trying to predict, right? All we try to do is say, hey, these are the probabilities, and this is what I'm going to do if it goes with the 20%. This is what I'm going to do when it goes with the 80%. This is what I'm going to do when it goes with the 40%, right? Like, that's all you can do, and that's the only reason. Like, that's the only way you can sustain in these markets. Austin, are you talking?
Yeah, my bad. Literally, as soon as you said that, somebody just sent me a message. Dude, I love the people that we have here, man. One thing I'll add just with what live price is doing right now is it's getting to 10 o'clock, and it's even funny here. What did we map out this morning with Mickey going into? Are we going to continue this firecracker? And look, we're doing step 2 almost, basically. So we're getting below market open. We're getting below, well, we are obviously below the 50%, but now going into the 10 o'clock hour, the more time we spend below market open and the more time we fail to even get above market open, the less I put a significance of potentially this high. And I think we are short for New York 1. Yes, we're short for New York 1. And so now what I'd be looking for anybody that is still trading or looking for trades is I'm going to take the first 5-minute high and low of this 10 o'clock hourly candle. If we get above the first 5 minutes, So let's say the first 5 minutes does this. If we get above it and then take the Q1 high, then I'm expecting us to go short false and come back and get above market open to take this high. If we get below the 1005 and do the opposite, take the Q1 low, then I'm expecting maybe this could be a short true. All right. And we take, or at a bare minimum, that we're going to make it a bearish hourly candle in the 10 o'clock hour, take the rest of the statistics, midnight open, opening prices, P12 mids down here. And again, I don't think this is the low of week. I'm happy to be wrong about that. We don't have a wick on the MNQ. We do on NQ, but we do not have a wick here. And typically we don't just, when we're making a weekly candle, distribute the one side of the weekly candle. At a bare minimum, we try to make some wick below. So I'm not sold on this just being a ripper for the rest of the week just yet. Mr. Tuesday Trader, I have a question about the boot camp. Who do I contact? Ask it here. Drop it right here in the chat. Contact us right here. That's why we do these Monday live streams.
Exactly.
Anybody that wants to see what we do, just ask it.
So right now, the problem that we have to solve is this going to be a short false or a short true? We know the high probability for a short false is here, but along with these levels, London OU to previous P12 mid. However, right, the problem with this is these probabilities drop off. So right now we're looking for that 4-step reversal in reverse, like I explained it in pre-market. Can we get above 9 o'clock 50? Can we get above 9:30? And then if that's the case, because right now short false supports this low of the day, we're just trying to see where price is going to net off of before we head back higher, right? And then, so right now we can get a live example of what we look for, right? So this is previous hour wick right here. And you can see that we bounced off of it. Is it strong enough to get us above 50%, or do we need lower price probabilities, right? If we start breaking out to the upside above previous market 50%, that's what we measure, right? Can we get above 10 handles, right? 10 basis points. And then you get to see that 4-step reversal happening in the opposite effect, in the opposite favor. Because remember, for a short false, which is the higher probability, right? Let's go look at it. Our high day, low day is in the day, right? Now, with that being said, if we do start coming back into this 9:30 range during this time, that signals they expect more of a range style day, unless we just blow through it and don't retrace it whatsoever. We blow through it one swipe, like cool, like we're gonna have a directional day, the end of day, high day. We'll see. But if we start swiping that 9:30 price, like we're gonna expect that range one behavior, and we'll adjust our trades as such, right? So for a short false, we can see, right, you make that low, that major pivot low between 9:30 and 9:45, and you spend the next 3 hours up. So we should be expecting a Q1 low and a Q4 high between 10 o'clock and 11 o'clock. So that's what we're looking for right now is, are we going to head lower, make a Q1 low, or can we not even do the 4 steps and we get 9, 10, 11 lower for a short true style day? And until it shows its hand, I have no. I took the midnight. I took the 9:30. Why would I rush my trades here? Right? There's no reason.
Everything just fired perfectly today.
Yeah, I love it when it does that.
Midnight hit, market open hit, gun. Dude, today actually is a cool little milestone from the gunship. If this trade hits TP, which I just checked on it and it's now in drawdown, but if this Bitcoin trade hits TP, this will be the first $1,000 day live with actual executions, not just like tracking the performance on paper. $1,000 day. If not, if this hits stop loss, this will be like a $700 to $800.
So the question is, just wondering on time requirement of boot camp. I have a day job, so can't be available during day trading hours all the time. Don't want to sign up if I can't attend the schedule. So we do classes at 5:30 Eastern time, right? The reason I do the classes at 5:30 Eastern time is because majority of the crowd, their family's still asleep. They haven't made it to work. and so they can be 100% focused. And then we do reengineerings at 1600, right? We trade all day live in the Discord, but we do reengineering at 1600. We cherry pick, we, hindsight trade how our systems, where the decision points were, where the exact clues that the market dropped, and we do that every single day. And we record 5:30 in the 1600 classes, so you can go back and rewatch them, learn at your own pace. There are homework requirements throughout the course that will, be expecting you to do. So yeah, so 3 months, like about a month and a half of it is education, and then a month and a half of it is applying, right? And it's, believe it or not, like in the beginning, it won't feel like it's self-paced, but like more towards the end, you'll see that it's a more self-paced course. And then like the last month and a half, it's all about building your business plan, bringing all the concepts together, and actually applying them into your charts. So yeah, like I built it because like I feel your pain. Until February, I was a working class individual myself, right? But now I trade for a living, and I designed the whole thing, right, for the working class individual like yourself, who's just looking to bring additional cash flow into their life.
And the one thing I'll say, guys, is like anybody like that's trying to sign up this coming, also the QR code is on the top left of the screen. If you want to scan it, that'll send you right to the boot camp. But don't approach it. And this is just not even with not just the boot camp. This is just with life. A lot of things, man, are hard. Okay. Like learning a skill, doing anything that's an above average attempt at life. Like you're not meant to be balanced. Like if you have a job, if you have a kid, and I can't speak for having a kid, I can't speak for this stuff. I'm about to be 29 years old. But we all have
and he still lives in his mom's basement too, guys.
I still live in my mom's basement. No, I'm joking. I don't do that. But it's like anything that you're going to do, there's going to be a trade-off, right? Like we made this 3 months because this is real. And even then you're not going to be transformed. You're not going to be just at the end of the 3 months, a Lambo trader. You're not, it's to give you a foundation. That's why we called it the boot camp. But in that process, anybody that, whether you do this boot camp, whether you go out and try to lose weight, whether you try to go and do anything that's hard, it's going to require sacrifice. It doesn't matter. And if you're not willing to just sacrifice temporary, small 3-month time frame of not trading, of not sitting here trying to always scrape together a trade to win the day, if you're not willing to put in a little bit of extra time, and instead of doing something that makes you feel good at the end of the day of a long, hard day, you got to maybe put in some back tests or put in some time to do the homework that we give you, whatever that is. If that is mentally sounding like excruciating pain, don't do it, because the only thing you're going to do is spin your wheels. You're going to waste your money, and you're going to say this doesn't work because you didn't give it the time and the effort that it requires, just like anything else in life. And then you're going to go and just find something else, and then it's going to be the same process. So I say this to be very real, that this isn't a game. This isn't something that we treat lightly at all. And you have to give it an honest shot. You have to. There is no ifs, ands, or buts. You can't just go half in and still trading your broken ways that aren't working. You can't go half in and then maybe watch some here and there when you get motivated and then quit and then do it again. You can't do that. But that's with anything. It's not just the boot camp of what we're doing. It's with anything in life. And that's what, if I had to gamble, I'd say a good chunk of that high statistic of most people failing in trading has nothing to do with trading, has everything to do with their willingness to just put stuff aside, put dopamine aside, put short-term gratification aside, and just really give something an honest shot. And instead, they're halfway in learning while also halfway in trying to earn at the same time. And you just can't do it. You can't earn and learn. I've said this since day one. This is one of my biggest pet peeves in the trading industry. People say you have to have skin in the game, and I agree. But you have to be able to understand the game to even put skin into it. And if you don't understand the game, aka you don't understand your plan, you don't understand the trade, you don't understand the profession that you're trying to do, you're just wasting money. You're just burning money that could be helping your family, paying your bills, getting your car paid off, whatever the heck you need to do. You're wasting money. You're spitting in your family face. You're spitting in your face, just blowing money, not doing something correctly because you're half in. So anything you guys want to do in life, but especially specifically this boot camp, if you want to start it, just be prepared for 3 months to go all in. And then if you don't like it, you don't like it, but at least you tried.
So far right now, we're expecting more lows. We couldn't make it back into 0.25 MAE for the breakout. And remember, we talked about this. What did we do here? We broke out of the 05 by 2 handles, and now we're rejecting it. So we're still expecting it to come at least grab 10 handles here to the downside, if not more. And you got the rest of your life to figure it out, right? Like, get to a point where you're committed to focus on you. Because the first thing I tell you is I don't give two shits if you make money. I don't care if you make money. I don't care if you become consistently profitable, because I know at the end of the day, it all comes down to you, right? The levels of proficiency. My job is to get you familiar and then teach you how to risk profile and test, right? Which will get you from familiar to proficient. The only way you become proficient to mastery, which leads you to the compounding phase, is by you doing the same thing over and over and over again, through the good, the bad, the ugly, the sad, right? That's why me and Austin are very much against the people who cherry pick trades and show it on Twitter, or like, look at this picture perfect, like if I would, and risk the reward tool, or the individuals who buy 100 prop accounts and only show you the prop accounts in the green, right? Like, we're very much against that, because we know it all comes down to the individual and them being able to follow and make the same decisions, whether it's for them or against them, right? Like, because that's what leads to that proper compounding effect, right? And those realistic expectations.
Yep. Having a realistic approach to anything that you know what I mean? It's just like, you can't approach this market as if you're an expert day one. And I think that's even what a lot of people go wrong when they're learning how to trade is, a lot of people gave me shit for trading midnight open and people still continue to, but they're pussies that don't even trade live anyways. But a lot of them, they'll say, oh man, use a wide stop loss. You're doing this or that. If you're trading and you're trying to learn a profession, but you're trying to copy the person that's at like level 20 and you're at level 0, it's not even going to make sense to you, even if you try to do level 20 actions, right? Like, meaning if you're sitting here trying to be looking at this market and saying that, oh man, as soon as this correction here, I'm going to go short and this is it right here. Like, nobody learning this stuff is going to be able to stick to this. Nobody. Like, so many people I've seen, they want to sit and act like this is the way to trade. Yet everybody that I've ever ran into that wants to talk as if this is something good, not one of them can call this live. Not one of them has just been able to say, yep, this is where I'm going short. I'm putting my stop here and my TP here. Exactly like you guys see me do here. They'll show you after the fact. They'll show you after the other 2 accounts that got stopped. They'll show you that. But I haven't seen a single person trade a tight, high risk to reward, very tight stop loss system. I have yet to see one person sit and say, this is where I'm going short exactly at this moment, not sitting some generic bullshit. Oh, this looks good. This looks good. And then after it happens, oh yeah, this was the short I took. No, I've never seen that. And so that's why I try to tell you guys, I don't care what people say. I don't care how, when we're sitting here talking about this stuff and it's like, oh, you want to make jokes about how somebody trades. If you can't actually do any sort of fucking, this is how I execute in real life, this is how I'm going short, this is exactly where I'm going to get in, who cares, right? Like, if I tell you I'm the best bodybuilder in the world, but I can't take my shirt off and show you, then what the fuck's the point? If I tell you I'm the best biker in the world, but you don't actually want to go on a bike ride with me to show you how good you are at biking or running or anything, if I can't see how you execute, if I can't see any part of aspect of what you think you're so good at, how do I even believe you? How do I even study that? How can I study anything that you're saying? So I don't even care about track records. I don't care about broker statements. I don't care about how much money you made last year. If you tell and speak to the people in this world that you have such a good system, but you can't just come up here and say, yep, I'm going short. This is where my stop is. This is where my TP is. yep, I'm going long. This is where my stop is. This is where my TP is. If you can't do that, then that tells me you don't really have confidence in what you're teaching anyways or showing other people. And then I'm just going to sit here and laugh at you while I'm sitting here doing the same thing every single day.
Absolutely. So right now, like the 10 o'clock has been swiping this whole 5 box. There's no, like we are still trying to determine if it's true or a false day. There's nothing, no decision to be made. We'll wait for the next 15 minutes to show its hand and then base it off of that, right? Right now we're stuck between previous hour 50 and this previous hour wick 50, right? So if you swipe this over, this is where the wick is. We're at the 50 and then we're at this previous hour 50. So we're just sitting ducks right now. And I am going to have to jump. I do have a nonprofit meeting I have to attend to.
Hey, this is perfect timing because guess what? In 15 minutes, if you're in the pack trade group, we have late AM session called Ambiguous Hour with PTFX and Cody. So we're gonna, pack trades.
Yeah.
And then we have Justin at the PM session. And then
I will not be on today. Sorry.
All right, never mind. I'm a liar.
But Danny might be there. I just have to miss today because I got a few things and then trying to get caught up in the pack stuff too. So, or the boot camp stuff too. So.
No, you're good. And then if you guys just tuned in for the first time, or just if you're a continuing listener, 4 p.m. EST every single day, Monday through Friday, we do re-engineering sessions where we just basically recap the day. So if you want one additional bonus rep of how we traded or executed with the statistics we use, but then you want to see just a repeated overview of that, we do that at 4 p.m. in the Discord as well. So if you want to join the Discord, there's the Discord. You want to join the boot camp's on the top left. Mickey, do you have any final closing things? We'll just wrap it up here.
No, I'm good.
Just while we're talking about that stuff, I guess if anybody's here and they're new to the pack or they're still on the free side of the pack and you have more questions, don't hesitate to open a ticket. And I and Austin, and if we need to, we can get Mickey brought in there, can go over anything with you guys. I think there's something pretty special about what we're doing. And we've got now, 3 paid boot camps done now. And we've got a lot of great feedback from everybody that's gone through that, that's given it its proper time and due. So definitely come and chat with us. We're happy to explain things and go into detail, but it's pretty fantastic. And every boot camp ending or graduation like this one we just had last week gets me more and more excited about what we're doing.
Heck yeah, Pocket. Daggone it. All right, ladies and gentlemen, y'all have a great rest of your day. Stay grinding on your goals and always remember, never let anybody tell you that you can't do something they never done themselves, because
That's right.
And they know that they not like us. We ain't gon' do it. The only thing that can stop me is me. If you're doing it